Hello everyone. Today we're going to talk about the American stock market, and we'll do this using the example of the ETF fund with the ticker SPY, which is directly linked to the S&P 500 index. They aren't strictly tied together, but the approximate ratio is 1 to 10. In other words, if you multiply the share price by 10, you get the approximate value of the S&P 500 index. Now let's look at the chart. What do we see? We see that this instrument dropped about 10% from its all-time highs, and then there was a rapid rise that led to a new all-time high, which amounted to roughly, 14%, just a little less. And what's interesting is that you can see that very often the daily candle would open with a gap up, meaning with a break. When such a movement with a gap up occurs, it means that the movement not always but often gains momentum. In other words, it's very powerful. And we have a lot of these gaps, a whole lot. These are so-called acceleration gaps. But what have we seen in recent days? We see that the stock has been opening with gaps down. Yes, after that it was bought back. And here there was even a gap up. But this suggests that the movement may be running out of steam, coming to an end. In addition, we can clearly see a well-defined daily scale divergence. Today's market opening was significantly lower than last week's close, and we now face the distinct possibility of seeing another red candle on the chart. While this is not an absolute guarantee of a further decline, it certainly serves as a very strong indication that one may follow. We also note that the entirety of this recent market activity is taking place right along this specific blue trend line. And let me remind you, this is a global upward channel, so if I compress the chart like this, we'll see, let's switch to weekly candles. That will make it clearer. This is a channel within which the index has been trading for many months. And right now we are at the upper boundary of this channel. What's interesting is that we've already approached it before. There was a 10% correction, and then we approached this boundary again. Notice that at the same time, the RSI value on the weekly candles at a new all-time high is clearly not reaching the previous highs that occurred at lower price peaks. Accordingly, this is not a pronounced divergence, but it is still a certain divergence on the weekly scale. Now let's take a closer look at the weekly candles, since we've already examined the daily ones. And I'll tell you the following. This week, once again, the S&P 500 index has set a new all-time high, and at the same time, it risks closing not just with a red candle, but with a bearish engulfing pattern. It hasn't appeared on the chart yet. But why do I say it risks this? Because there is a clearly defined divergence that has formed on the daily time frame. And if after reaching a new all-time high, we see a red weekly candle here that engulfs the previous week, it will be a very powerful and strong signal to enter a short position, or at the very least, to close your long positions if you have any in the market. As I have already told you, a drop of the index to the 50-week moving average against the backdrop of tremendous growth, especially if you look at it from a distance, over years or months, is really insignificant. It's just some microscopic correction that doesn't even fit into the concept of this crazy rally. Accordingly, we have already seen the index drop to around the 100-week moving average, which means that the next decline could reasonably be expected to reach at least the 200-week average. That's somewhere around 5,500 points. Why? Because, the average is moving upward, and by the time we could theoretically reach it, it will be somewhere in that area. But I emphasize, no one ever invests at historical highs because you are guaranteed to expose yourself to insane risk. All that's left is to look at the index on the monthly candles, and then this video can be considered complete. Take note, a new all-time high, a huge green candle. The RSI is clearly falling short of previous values. And here as well, there is a clear, powerful, strong divergence forming, but it's too early to talk about it. Why? Because we don't see a downward break on the index, or rather on the RSI indicator, which we have already seen on the daily candles. So for now, it's still pointing upward, and the divergence can only be considered as a possibility. Now we switch to the daily candles. Look, just one indicator. You can see here was one peak, a downward break, the second peak, a downward break, the third peak is about the same as the previous one and clearly lower than the one before that. So here the divergence is already formed. This is not a guarantee of a decline, but it is a very strong signal, and therefore we have every reason to expect the index to decrease. Well, at the very least, we can expect it to move toward the area of the nearest moving averages. So that's 6,800 points. But I think the movement will be much deeper, and we will keep monitoring it in the upcoming reviews. Subscribe to the channel. The next analysis will be about Bitcoin.